Right, so I need to just share my screen there again. Okay, so I want us to kickstart with something lighter because I know we have applied ourselves. So maybe just to get us, or should we start with something not as light? Let's start with something a little bit more. Let's start with 2.5, question 2.5. I'm guessing not everybody signed the register, right? So I'm going to leave this here. And when you guys so I want us to do question 2.4 in your textbooks. All right, and those who don't have textbooks, fortunately, we have it on the board. All right. Now with question, can you guys hear? Or should I close the doors? Close the doors. All right. Okay. So with question 2.4, under the required, it says prepare the statement of comprehensive income, all right, for the year ended 28 February 2001. Assume Kumutso Enterprises were to introduce the following measures for the financial year ending 28 February 2002. Okay. Then I'm going to skip down to the required before you read that additional information. Oh, actually, we can now. Yeah. Prepare a budgeted statement of comprehensive income for the financial year ended 28 February based on the above information. Okay, what above information? Okay. Increase net sales revenue by 10%. Reduce cost of sales by 8%. Keep additional income constant. All right. Reduce each of the operating expenses by 10%. Reduce interest expense costs by 20%. Okay. So the first thing they want us to do is to actually do 2001, the statement of comprehensive income. Okay, and then they want us to do 2002. Okay, so I've pretty much already done 2001 for you guys. Okay, because literally all that you need to do there is just organize the information into the right places. Okay, this is obviously me assuming that you guys obviously have seen an income statement before, which I know you have. All right, because we obviously did some accounting together, and I know you guys, whether you passed it or not, you definitely went through accounting in order for you to be second year. Okay, all right. So we have seen this before. So literally all that you're doing here is just organizing the line items that you already have. So wages and salaries is obviously going to fall under expenses there. All right, less your operating expenses. All right, water and electricity, same thing. Sales returns is obviously going to affect your sales revenue right up top there. Okay, Then insurance is also another expense, all right? Then your interest on savings account, that's another revenue, all right? So that's your other income. Okay, how did they do it here? All right, so they added it interest income under operating profit. Okay, sometimes other income is right up top there, right after your gross profit, all right, or before your gross profit sometimes, or here I see they've done it the other way. So you can Google your comprehensive income statements or your profit and loss statements. They are slightly different, but at the end of the day, it's pretty much the same thing. You still would have gotten your marks if you had done it either or. Okay. Then after that, you had advertising. Then you have packaging materials. Then you have sales. All right. Then we have credit losses recovered. That's also another income. Right. Then you have rent paid. If it was rent received, that would also be another income. Then we have vehicle expenses. That's obviously an expense. We have cost of sales. That's obviously going to be used to calculate your gross profit, as you can see up top there. Then we have interest on overdraft. Okay, that's also another expense. And then stationery and telephone, also expenses. Okay, so it's really just plugging those things where they need to be, and then obviously putting together your income statement. All right, so there's no point in us doing that together. Okay, then we go down to part B. All right, and the reason why I wanted us to do this is because you're going to see a lot of this as you go along. Okay, so there's increased net sales revenue by 10%. Okay, so we have to increase net. Notice they said net sales. Okay, net sales is obviously your sales after sales return. Okay, if they had said increase your sales by 10%, all right, then we would have focused on the sales before actually deducting the sales returns, all right? And then in that chance, they probably would have said, but sales returns remains constant, or they would have said, you either decrease or increase your sales returns, okay? So that is exactly what you can see we've done there. So what does that work out to? Somebody tell me. 10% increase for 408,000. Okay, once again, there you can say 10% of 408,000 and then add it to 408,000, but a faster way could be just to say times what? Because what we want is the total net sales for 2002. How can we do it? What would be the fastest way? Could simply say, I'm going to write it here, times 1.1. Okay, because it's 10%. Remember, 10% is the same as saying 0.1. Okay, so what do we get? 448. Oh, why? Let's do this. 448,000. That's it. That's right. 800. That it. Okay, cool. Right. Then they also told us reduce cost of sales by 8%. Okay. So in this scenario, we could obviously calculate what is 8% of. Oh. Then. Okay. We could obviously calculate what is 8% of cost of sales and then add it to the current cost of sales figure. Or again, we could just quickly say, because we want that total times 1.08. And what do we get? What do we get? What is our new total for cost of sales? Are you calculating, my friend? What do you get? 1400. Okay. Happiness. Is everybody getting the same thing? Okay, so we've done that. Then we can move on. It says keep additional income constant. All right, so we can leave that as is. Other operating income, we leave it as is. Credit losses recovered, we leave it as is. Gross operating income. Okay, so that's just adding that together. And when we add that together, should get 2,000 there, 5,000 there. So you guys correct me if I'm wrong. 30. Okay. Everybody happy? Can we go on? Okay. Then they tell us, the next thing they tell us is reduce each of the operating expenses by 10%. Okay, this is good. We're reducing our costs. Okay, so again, if we're reducing our costs, you could obviously calculate 10% of everything, or you could literally just say 90%. So literally just say times 0.9. And I'm just sharing this with you. I'm sure some of you are like, oh, we already know this. I'm just sharing this with you because obviously these are the small things in the test or exam that save you a minute or two, okay? Which is what you want, okay? So that you have some extra time for the things that you might find a little more challenging, okay? So you could have done that. So 88,000 times 0.9, what do we get? Somebody tell me. What do we get? 88,000 times 0.9. 79,200. Thank you very much, sir. Okay, then 0.9 times 32,970. Yes? Oh, I thought you were raising your hand, my bad. What do you get? What do you get? 0.9 times the 32,970. 29. Okay. 673. All right, great stuff. Ben. The next one, 0.9 times 10,600. What do you get? What do you get? Somebody tell me. 9,540. All right, awesome stuff. Then advertising, 0.9 times 9,700. 8,730. Okay. All right, then the next one, 90 or 0.9 times 3,460. What do you get? Yeah, times 2,460. 2,240. Do you guys agree with him? You disagree? What are you getting? 114. Anybody else? Seems about right because this would be a third off of it. But I want to verify. Anybody else? What are you getting? 114. 1-4. Looks like that's what most of us are getting. I think maybe you times it times 0.9 twice. Okay. All right. Awesome. Thank you nonetheless. Thank you all. All right. Then the next one, vehicle expenses, 0.9 times 17,260. Did I skip something? Oh, yeah, rent paid. So 90% of 54,000, what do we get? 48,600. Okay. Then vehicle expenses, somebody calculate that. 90% of 17,260. 15,534. All right, thank you. All right, and then 90% of 4,590. 4,131. Is that right? 4,131. That's what you said. Okay, cool. And then finally, we have 90% of 2,600. What do we get? 2,340. Cool. Right. All right. And then the final thing that they told us is that reduce interest expense by 20%. Okay, so that would then mean what? How are we altering our interest on overdraft? That 2,000, sorry, that 780. What are we timesing it by? 0.8. 100%. That's exactly what we're doing. So what do we get when we times that 780 by 0.8? 624. Okay, that sounds about right. All right. All right, and then hopefully when you add all these expenses, you get that 200,862. All right, and then hopefully when you do your calculations there, you're adding and subtraction, you arrive at the same profit. Okay, but anyway, that is activity 2.4. Okay, that is your activity 2.4. So literally, you'll find yourself in several instances in finance where they are giving you that information that this has changed by that percentage, this has increased by that percentage, decreased by that percentage. You need to be able to very quickly calculate those and place the figures where they need to be put. The next thing that I want us to do is to do activity 2.5. Activity 2.5. Okay, then as you flip there, under the required, it says calculate and fill the missing figures on the statement of comprehensive income of Dorcas Pty Ltd for the year ended 31 August. Okay. Okay, so there you can see everything has been populated for us. Except for what? What hasn't been populated for us? The taxation, okay? We don't have taxation expense. Do we have the... Okay, so for those of you who don't have textbooks, the profit before tax amounts to 570,000. Okay, we don't have the tax expense. Okay, that's the missing bit. Okay, and because we don't have the tax expense, we obviously can't calculate our profit after tax. Profit after tax. Okay, so we need this. How do we calculate our tax expense? We spoke about our tax rate when we were going over the theory. Who knows what our corporate tax rate is? Yeah, it's 28%. Okay. So can you see they didn't tell you that anywhere in the question? They didn't tell you that. They expect you to know this information. Okay. So then how do we calculate our tax expense? How do we fill in that question mark? All right. Profit before tax times 28%. All right. So here we just say times 0.28. And what do we get? Sorry, I can't hear you, my friend. 159,600. Okay. And when we deduct those two, what do we get as net profit? Or profit after tax? What are our investors going home with? Or this is now your profit that's available to ordinary shareholders. Remember, we played around with that when we were doing our earnings per share. Remember, the formula for earnings per share is profit available to ordinary shareholders divided by number of shares. So what now is the profit after tax? 400 and there we go. Okay. Right. So the whole point of this exercise is to remember tax is 28%. Okay. Tax is 28%. So we've done 2.4, we've done 2.5, and then the last one that I want us to do, because I know our brains are tired. Am I wrong? Our brain's tired. So we shouldn't do anything after this. All of a sudden I have so many responses. Is this the same class? All right, so let's finish off with 2.3. Okay. 2.3 says, from the list of accounts below, select the ones you believe should be classified as operating expenses. Okay, you know what? I think we should just make it a little bit more interesting. We should actually just quickly mention what account each of those are. Okay, so I'm going to read them out, and then you guys just let me know, what is that? Is it a liability? Is it an asset? And what type of asset? What type of liability? Non-current? Is it current? etc. etc. Okay. So wages and salaries. What is that? It's an expense. Input VAT. What type of asset? Current asset. Well done. Okay. Output VAT. Yes, current liability. Insurance. Expense. Creditors control. Current liability, yes. And then you have repairs and maintenance, expense. Rent expense, water and electricity, yes, 100%. And then we have interest on fixed deposit. Interest on fixed deposit, income. Remember, they were talking to the interest on the fixed deposit. We're not talking to the fixed deposit, okay? So that is income. And then obviously a fixed deposit is, you guys said it? It's an asset. What type of asset? It could be a current, it could be a non-current. So you guys are not wrong. Now, what I've seen from experience in accounting, they, without telling you, like, because here obviously they just say fixed deposit. Without telling you, you can assume it to be a non-current asset. They assume that this fixed deposit is for longer than 12 months, okay? But if they do say, like maybe in brackets they say 8 months or 10 months, right? Or even 12, you can then say it's a current asset, okay? So I've always had a bit of a gripe with that one because it's like usually they don't actually clarify because it can be either or. So yeah, all right. Then tax expense, what is that? It's an expense. The answer's in the. All right, advertising, telephone, debtors control, credit losses. Are you sure? Are you sure? I missed doing that. What is it, guys? Credit losses, what is it? It's what? An expense. It is an expense. All right, then cost of sales, what is that? It's an expense. And then finally, stationery. Oh, and that's it. It says no cheap. 100% guys, it's an expense. Okay, guys, so for your homework, I want you guys to do, where did I write these things? I want you guys to do, did we do 2.1? We didn't do 2.1. I want you guys to do 2.1. I want you guys to do 2.2. We did 2.4. I want you guys to do 2.6. Now, I think that's enough, right? 2.1, 2.2, and 2.6. Okay, guys, we finished the ratios. You will probably never do them again together. Please make sure for test 1 that you're comfortable with that. I think everything else in unit 1 and 2 is bearable. It's easy stuff. Okay, but I want us to knock test 1 out of the park. Okay, just to put ourselves in a nice position there. So get cozy with your ratios. Literally, I think once you put a ratio sheet together, formula sheet together with the ratios, and you look at that and you look at the different commentary, all right, in the different exercises, you'll be just fine. Okay, all right. So today or the last time we had a session, you weren't really liking them. Trust me, you'll actually thoroughly enjoy them after having some practice. Otherwise, do enjoy the weekend. If you sign the register, I'll see you when I see you next. Yeah, it looks like nobody has any questions, so I'll see you when I see you. Oh, and if you don't have a textbook, it's not an excuse. Take pictures from somebody who has, okay? Or share them on the WhatsApp group. What WhatsApp group? The one you should have set up by now.